next up, of course, we are the Global Mobile Internet Conference, and of course, we've been talking about all these opportunities abroad for the sector, and most importantly, investment. If you have some cash, if you're part of a VC or anything else, where can you put your money abroad? And so we have a great panel now who will be speaking about investment opportunities abroad. And so first, I want to welcome to the stage the moderator, Akio Tanaka, who is the co-founder and managing partner of Infinity Ventures. Welcome to the stage, Akio. And let me also announce and introduce the panelists. We have Mr. Jeff Clavier from Softtech VC. We also have a few other great guys. I've just lost my page here. Everybody else, please come up on stage. Everybody, yeah, there you go. But I'm sorry about that. So John Malloy, partner at Blue Run Ventures, Pete Moran, partner at DCM, and also Jeff Richards, partner at GGV Capital. So thanks a lot, guys.
All right, thank you very much for the introduction. And I think we're going to get started with our global VC session. And just before we get started, I just want to actually ask the audience here, how many of you today are participating from Asia, not from here, Silicon Valley, but can you raise your hands? A few? And the rest of them, and how many of them are from here, Silicon Valley? Okay, great. So you guys overwhelm the visitors from Asia. So I have an important announcement to make. So obviously, our goal is to make this session interesting so that you guys can all keep awake. But you know, this is a time of the year, if you're flying in from Asia, you're going to start feeling sleepy. And most likely, the people who just raised hand first are feeling the sleepiness. And despite our efforts to make it interesting to keep them awake, and if you fail and if they start sleeping, please, local people here, use any sharp objects that you have on your hand to keep them awake. So that's your job. Now, let's go back to our job. Our job is to talk about some of the opportunities in global mobile investments, and I think we have a very interesting expert panel here who has their own war stories about mobile investment opportunities globally. And so maybe as a part of just the introduction, I'll get every one of the panelists to introduce himself and say a few things about what they actually do. And starting myself, I'm Akio Tanaka from Infinity Ventures, and we're an early stage VC focused on mobile consumer internet companies in both China and Japan. And maybe Jeff, you can start the intro round.
Sure. So Jeff Clavier, Softtech VC, been investing in consumer internet for 8 years. Today, most of what we do is consumer mobile and internet. And so there's not, for us, there's nothing specific in terms of mobility except for the infrastructure piece, which is one of our core areas. And we've done 125 investments over the past 8 years, and we're investing out of a $55 million fund now.
John Malloy, Blue Run Ventures. We also are an early stage venture fund, so that means we're the first institutional investor in a round. In terms of geographic areas, it's China, Shanghai and Beijing, Menlo Park, and Seoul, Korea. In terms of areas, mobile services, mobile hardware, software in Asia, and internet services here are our main areas of investment.
Hi, I'm Pete Moran with DCM Doll Capital Management. We're active across the US, China, and Japan with offices in Silicon Valley, Shanghai, and Beijing, as he said, as well as Tokyo. We invest broadly throughout both the mobile landscape as well as much of the rest of the internet, IT, digital media landscapes, managing a $2.5 billion pile of capital at this point.
I'm Jeff Richards with GGV Capital. The firm was founded in 2000, and today we have $1.6 billion under management, spread about evenly half US, half China. We have 3 partners here in Silicon Valley and 4 in China, and about 110 companies in the portfolio, again, spread evenly about between the US and China.
Okay, thank you. So you guys, look at our guests, star panelists here. I think they look very intelligent and smart guys doing the mobile investment, but I think starting like that is just too boring. So I just want to ask some of the brightest, smartest VC panelists about the stupid things that they've seen in the past. Either companies you looked at, you invested, or you didn't invest, it doesn't matter. But please tell us some of the worst horror stories you have seen in this business, and maybe we can learn something from your past strange encounters. So who wants to get a start?
I think we will have made stupid investments because by definition, the day we invest or the minute we invest, it feels good, and then the day after or the week after, it might change. I think
the hangover, or what happened?
Yeah,
Too drunk?
the day after kind of thing. In terms of something that took on way faster than I would have expected, that I passed on recently, I think Hotel Tonight is a good example where they raised a large Series A here because the CEO had a great track record, and they essentially took off very, very quickly and raised a bunch of money and have now started to go to Europe much faster than I expected. So it's actually a great execution as a mobile play, a pure play.
That's a nice story. I'm asking to tell us about horror story and mistakes. Isn't that a good example?
Well, it's a good example because the ability of the business to scale as a mobile pure play was until now not seen. I think it typically takes a lot more time than Hotel Tonight has executed.
Okay, so Jeff is not willing to admit he had any failures. Can anybody else actually give us some more human stories here?
Well, I mean, I think we're going to stick together because we're all early stage.
We've all made so many fucking mistakes. There's no point in talking. Oh, I had 20 companies splattered, on the wall. Who cares?
As early stage investors, you have to be used to taking risks. You take risks, you're going to fail. Yes. So we have lots of things to talk about in failures, but we're also entrepreneurs and optimists. So, we're like genetically oriented to go to bed, thinking the world is going to end or barely sleep, and you wake up the next day and you're ready to do it again, optimistic. I mean, that's by definition who we are. So I think if you want a horror story, it's not one from anyone on the panel, but when you look at something like color, I think that's the news of the week, right? I mean, and I think the lesson from Silicon Valley is when we get hyped, when we overinvest too much money in companies too early, I think that's a disaster. That's the horror story. So, seeing something like that is just, I think hopefully it's a cold shot of reality in people's faces, and realize that you have to build real businesses. You cannot skip the steps to creating great companies. When people tell you were lucky, there was actually a lot of work and a lot of scary times that went into being lucky. And I think that's going to be uniform for anyone who's at the early end of the market.
Peter, what do you have to share?
Yeah, I'll talk about a partial mistake. We spend most of our time looking at businesses, and I in particular have a love for complex technology businesses where there's some deep underpinning technology that allows a company to be different sustainably. And then I'm constantly reminded that the simplest businesses often do better. And we all know that things like water, reinventing bottled water and reinventing the concept of coffee with Starbucks, ridiculously simple concepts that have been very, very powerful. One of the things we initially missed on, we're an early stage investor just like John, and we missed on the concept of reinventing SMS and doing it with a free service. And we're sitting here going, SMS worked pretty well 10 years ago. It really wasn't very expensive. Why would you bother reinventing such a rather simple service? And the thing we missed is that it was a service that really hadn't evolved. So along comes a company out of Korea called KakaoTalk that understood that this was a very powerful platform. If you just added some very, very simple technologies on top of what had been done in SMS for years, and you started to use the power of the interconnections that are inherently known because these people are messaging each other, it becomes a platform. And today that company is minting money by adding small applications like games on top of a very powerful, simple underlying network. But what we missed was the concept of doing that at an early stage, so we had the honor and privilege of paying up big time to come in at a later stage.
So you guys are in Kakao now?
Yeah.
Yeah, Kyo, I guess I spent 10 years as an entrepreneur before I joined the VC world, so I'll tell you a horror story as an entrepreneur, which is,
thank you.
And maybe for the entrepreneurs in the audience, I think there's two things that I would pass along that I learned as an entrepreneur and I see now as a VC, and one is, I think to John's point about raising too much money, I raised $130 million for my first startup, and it was about 120 too much. And I think that, the VC industry is set up to want to give as much money as they possibly can to good companies. And it's not always the right thing for the entrepreneur. And so I think smart entrepreneurs who've been through the cycle a few times are very thoughtful about how much capital they raise, when they raise it, and sort of earning the right to grow and building a company that is sort of right-sized for the amount of capital they're raising. The second one is to raise money from people who really understand your industry and understand your business. I see it in our world today where it could be a great company, a venture capitalist is excited about it, but they don't really know a lot about it. They get in, they invest, and a year down the road or 2 years down the road, they're at odds with the founder and the CEO because they have a difference in philosophy on the industry or how to run the business. And I won't go into the gory details, but it can really be frustrating as a founder, as a CEO, and frankly as an investor when you get into one of those situations. So those are two things I would pass along.
But by the way, what was that business you were running at the time?
It was called Quantum Shift. We founded it in '97, and it was basically gone by 2003.
Thank you.
Which I think the one mistake we've made across a number of mobile investments is to overestimate our ability to use tricks and techniques to acquire users. And so getting mobile users at the end of the day is based on having a great application that people will naturally come back to because they find it sort of useful. And any mechanic you can build, yes, there are tools that can improve retention, acquisition, whatever, but at the end of the day, you get to an Evernote because Evernote is just a fantastic application or service.
Thank you. Now that we got our warm-up question over, I'm going to get into the main subject, which is really investing globally. And I think for this one, I have actually one slide that I brought over. I wonder if I can have the slide projected on the back wall here. Here. So this is actually some data I got from App Annie, which is just a full disclosure, one of our portfolio companies. And I think this data is as of last quarter in 2012. So it's actually just a list of countries for both Apple's iOS market and Google's Android market, and ranking both in terms of download, but also revenue. And I just want to use this as a little bit of background as we talk about the global opportunities. And perhaps I would like to ask our panelists, just looking at this, how they think about global opportunities and if possible also, which of those markets you guys are in particular investing in. So who wants to go first?
I'll take a crack
Yeah.
at it. So my background is prior to starting the firm, I actually worked in the mobile industry and worked worked in a large global handset OEM. So my perspective on mobile is that it's, the great thing about mobile is it's obviously the hugest market of all, but it's also, the scary thing is it's also the hugest market of all, and you're competing with everybody. And so, although I like global, I think that you need to realize that you still have to build some differentiation, particularly in the area of services, by market by market. You have to figure out your value. You have to be local and global at the same time, and that's really, really hard to do as a startup. So I think there's different stages to think about it, and when we look at opportunities, we'll start in a market, and if you talk about going global, it's actually it's a much more precise conversation about country by country. What do we do with this service? What are the attributes of what we're investing in, and what are the best markets for us to attack? I think if you just throw stuff out there and you think going global is going to solve stuff, you're going to burn a lot of money and you're going to go out of business. So I think you still have to be local at the same time. You still have to figure out your value, and then you have to be very, very precise in your go-to-market. That's what we're looking for, and that's how we look at it.
So you're saying that ultimately the market may be global, but you still need to have a very sharp local focus.
Global sounds like it's a great buzzword, and I've been using it my whole career, and I love it. But it's a challenge, and it's very, very difficult to do. Because there's a new competitor in every market you go to. It costs a hell of a lot of money, and the human capital toll is even worse. So being able to actually build a company that's going to be able to operate in multiple markets is no small feat. And since we start companies, we look for people that actually have done that before. Or we agree that for some period of time, we're going to prove ourselves in a local market.
Just for our information, which of the geographies are you most exposed right now, if you think about some of the local focuses you might have had in the past?
Well,
I know you're investing globally, but which are the more
U.S. and
hot
China,
spots?
I mean, the two biggest markets. So if you look at our portfolio, particularly our mobile portfolio, well, actually, and Korea, but it's a much smaller market. So U.S. and China is where most of our activity is. And so I look at a lot at launching services here, whether we can launch them there, or vice versa. And it's not an easy task.
And have you had any success going U.S. to China or China to U.S., vice versa?
So far, all of the service companies are really dominant in sort of regional expansion. So if you look from our Chinese portfolio, we've had successes go from China to Korea or China to Southeast Asia, but actually coming to the United States is tough. And I'm looking, right now I'm in the middle of trying to launch a company that is partially based here, partially based in Europe. We're trying to do something in China, and I'm knee deep in the weeds and trying to negotiate how we actually do that, because just the regulatory structure is so different. Typically the areas that we like to invest here in the United States are regulated or restricted industries, and so that adds a whole layer of complexity. So I think that, sorry to be boring, but when people sort of throw out the buzzword, it frustrates me because they don't really understand what they're talking about.
Can I jump in there with a couple comments that I think fit very much within what he's saying? I mean, not surprisingly, if you look where the five of us have offices, it correlates extremely well with the top 3 slots on almost all 4 of those columns there. So that's where a lot of the core action is. But just one specific example that I think goes to the point he was making, within each country there are very specific examples of success. You could take a company that most of the people in the room have probably never heard of called Pokelabo. I'm sure you have, out of Japan. It's not the #1 game developer in Japan, but that one company has 4 titles that would be in the top 10 of mobile games here in the US. And you look at the monetization that has occurred on mobile in Japan, a much smaller country, versus the US. Japan is dwarfing the US in terms of monetization on mobile games.
Oh, Peter, I have a slide for that for you.
Okay.
This one. This is actually another App Annie slide. It's showing revenue per download, but it includes both paid for apps, but also in-app purchase revenue. And you can see the global average is actually about 47 cents, and US is around 56, which is slightly above the global, but Japan is crazy, it's almost $2.
So what's interesting here is it's only 4x the US. Japan versus the US. About a year and a half ago, it was 10x in Japan versus the US.
So it's US catching up? Is that what's happening?
Japan's actually coming
It's
down.
coming. Oh, okay.
Q, I think most of the companies that we meet in the U.S. that are mobile-first companies, they've been founded in the last few years, have China very high on their priority list. It's something whether they like it or not, they're getting users in China. They're starting to open offices. They're opening development teams in China. And I do think your question about are we seeing Chinese companies come to the U.S., I think we're going to see more of that. Young Fu was talking earlier about UC Web. They've got 300 million users around the world. They're coming to the U.S. YY announced they're opening an office in the U.S. and coming to the U.S. Obviously, Tencent has been very aggressive in investing in acquiring companies here. So, and it's sort of interesting being a firm that's spread across the U.S. and China, because in Silicon Valley, we get very excited about companies that have 3-4 million downloads or users, like Path, for example, which is a tremendous app. I use it. Has 4 million users. 4 million users in China wouldn't really put you on anybody's radar screen as a very successful company. You need to be in the tens of millions at least to start getting attention. John and I are both an investor in a company called Meilisho, which has got 10 million plus users. Its iPad business is taking off. So I think one of the things that U.S. Entrepreneurs have to get used to is the scale of what's happening in China. And the monetization rates in China will catch up. I don't know how long it will take, but at some point they'll catch up. And you're going to have the 400 million mobile users that you have today, plus another 400 or 500 million users who will come on and experience the internet for the first time on a mobile device. They'll probably never touch the internet on a PC. And that is something that all of us are very excited about as we invest in the mobile ecosystem.
Now, have you guys seen trends like this? Like, we just spoke about UC Web, which is basically coming from China to US. But then there's another startup from China, Dolphin Browser, and they really didn't get started. It's a Chinese company, but their main market is US. So US is actually bigger for them than China. So we're actually seeing this kind of interesting hybrid companies. And if you go to their website, it actually looks like an American company. For the longest time, I used to think Dolphin was actually an American company until I found out they came from Wuhan in China. So are you guys seeing these kind of trends now? And I think this was something that was not possible 5 years ago when people are still working on a feature phone platform. That with the smartphone platform, now I'm seeing this kind of strange, it's not strange, but interesting phenomenon where countries of origin sometimes differ from the main market they're operating in.
I think we've seen that with a couple of, so we spend most of our time in the US, and what we do the traditional way is you build a company in the US, you get to scale, and then you try and start the European penetration and eventually Asia. And what we've seen is a few sort of European companies that did just that, which they were actually moving to the US or into the US much faster than getting Europe, because Europe is a very fragmented market where user acquisition, marketing, whatever, requires a solution in each and every country. And so they ended up moving to the US and became US companies, and you sort of forget they were originated in Europe.
Jeff?
Well, I think Android and iOS have just completely changed the game, and the App Store concept have changed the game. You can't even, you go back 5 years, you would have tried to work with a carrier, work with the handset manufacturer, try to get on deck, have to give up a huge percentage of your revenues. I mean, it just wasn't feasible to be global 5, 6 years ago. And we just invested in a company in China called Coco China, which is the #1 game development platform in China. They have a game called, it's a fishing game. They have 100 million downloads of the game. I have it on my phone. My daughter loves it. I don't think you would have seen 5 years ago a company in either China or the US, had they come to their board and said, good news, we want to make sure we're ready for the US, we're ready for China, it just would have not even been on the priority list. Today, every mobile company I meet with in the US has China at the very high end of their, now we're self-selecting a little bit, they're coming to us because of our capabilities. But man, it'd be hard to argue that you want to just limit yourself to the US market for the first few years of your life when you've got this enormous market in China and Japan to go after as well.
So is that actually then somewhat different from the perspective John was presenting before? It's global is a keyword, but still you have to focus on local. But at the same time, today I'm actually seeing a lot of examples like KakaoTalk and also another messenger app in Asia, Line. Both of them, even though KakaoTalk came from Korea and Line came from Japan, but they are spreading like wildfire into different countries where they have no presence and they even never thought about entering those markets. So is that actually changing the rule of the game now?
I think there's different levels. So if you're talking about distribution, you can localize an app, you can put an app, you can change an app's language and get a certain amount of distribution. But if you really start to think about monetization, that's a lot more complicated. And there's different economic systems in each of the markets. There's different sets of partners in each of the markets, so it's not a panacea. In China, we do a lot there, and we have a bunch of great companies. But the thing that's frustrating me is that it still needs decent cloud services. It's very, very, very frustrating to try to actually deploy a service there. It's such a long negotiation process that you have to be very, very careful. And if you don't have people that know what they're doing, you can make a lot of mistakes. So I think that's a step that we need to see in that market.
Yeah, and the tough thing here is, on the one hand, you have to go to these markets because they're so compelling, but I can name far, far more failures than I can successes in that expansion.
And often when we talk about this area, we tend to always talk about games, right? So messaging apps and games, yes, you get broad distribution. But when you want to start to drive to something more meaningful services, I think you have to have more.
Are you saying games and messaging apps are meaningless?
No, I think that games are relatively. So there's certain things that all humans do, right? And certainly we all like to be entertained by games. And so the sort of game mechanic is relatively pervasive. There's nuances by society norms, so different cultures in terms of how you monetize, what you're willing to do, what kind of privacy you're willing to have. So, but games are games. I mean, I think that you can do games. But if you're trying to do like a social app, like that's a little bit different.
Like what kind of app? Dating app? I think they're getting
any of the social apps will have their own particular social code, and not everything will translate. If you want to go for mobile-first e-commerce applications, so we're investors in Fab, and Fab today sees 30% of their traffic and sales on their iPad and iPhone platforms, and it's really growing very, very, very rapidly. We just launched them a few months ago. And as we think about what it means to actually get this to Europe, it's actually not that complex. Thinking about Asia, I think it will be, we think that Taiwan, Korea, and Japan are actually prime for them, but China, I think, will be a long way.
Another thing I just add, eventually brand marketers will pay for a lot of what happens in the mobile ecosystem, right? That's who pays for a lot of what happens in the internet ecosystem with display advertising. Brand marketers care about China, right? For most of these brand marketers, whether it's Ford or Coach or watch manufacturers, luxury brands, Apple, it's their number 2 market, right? Mercedes. There were more S-Class sedans sold in China last year than the US and Germany combined. So brand marketers are increasingly saying to the companies they're working with in the mobile and the internet ecosystem, how can you work with me in China? I'm using your product in the US, how can you support me in China? And I think, I was on the board of a company called Buddy Media, which was acquired by Salesforce. Buddy co-invested with us in a company in China to go after the social ecosystem in China because their brand marketers were saying to them, I need your help with China. And I think that will start to change the monetization rates, it'll start to change the way companies make money, and it'll really accelerate, everyone's interest in playing across the 2 markets when the people who are going to fund a lot of what happens on the internet is coming from the folks who want to be in both of those markets as well.
I think, one of the things I was thinking about, what is some of the frictions on going international? I think you talked about, specific perhaps social services that are much more locally oriented, but I think also payment, I think, is one big pain in the neck. And I think some of the market, like even China, until recently, most of the users in iOS users in China had no ways of paying. Finally, Apple did something different in China where instead of tying your credit card, you can actually tie your bank account and then do actually prepaid deposit into the iOS account, iTunes account. That's how people in China are finally starting to pay wires. But have you guys actually seen some of the example of how payment has been a bottleneck, but also how it can be overcome in a global expansion for mobile apps or services? And maybe some of you are actually investing into such payment properties.
Well, I can tell you, I can answer your first question and your last question.
Okay.
So one of the more interesting experiences I had was when we launched, so I was an early investor in PayPal. And the thing that excited me was that was actually the global opportunity. And when we were just about to be acquired by eBay, the thing that sort of bothered me was I could see that we were ramping globally. And I had this great experience and unnerving experience. Shortly around that time, I was in Shanghai, and somehow the taxi cab driver heard one of my colleagues say the word PayPal. And he proceeded to sort of like argue with me, and all he kept saying was Alipay, Alipay, Alipay. And so the lesson there is that first off, in payments, there has to be some margin. There should be some transactional margin to make the business work. But in China, the competition, the level of competition, the things that people are willing to do to take away that opportunity is pretty amazing. And so Alipay kind of kept us out of the market by basically, destroying value. It was kind of like it was like Android probably learned that model for payments. And so that taught me a lesson, though, about how competitive that market is.
Alibaba has done that for eBay as well by having
Exactly.
an auction for free.
But they would argue, by the way, they weren't destroying value. They were just making money a different way off the same consumer.
Hence the Android reference.
Yeah. Exactly.
I think
It's
payments
also,
is
they were not doing it for free. It's basically VCs are paying the bill until the business
payments
takes off.
is a little different animal when it comes to global expansion because you have a lot of regulatory issues you need to go and deal with in whatever market you're going after. And we were fortunate to be an investor in Alibaba, and so we benefited from that competitive situation. But I know, today we're an investor in Square. Square has very big plans to expand internationally. But every market has, it's not like launching an app on the App Store. It's a much more complicated ecosystem and probably will take many years to get into a lot of the different markets, as it took many years to get into the US.
Has Square already launched outside of the US at this point?
They're in a few markets.
Yeah.
But yeah, we're investors in a company called 99Bill, one of the primary payment platforms in China, and it's taken years to get the license that they now finally have. But ultimately, if you don't have that license from the government, you're not really going to be a participant.
One comment, Jeff said something that is worth sort of highlighting. When you think about how we look at it as investors, we're not talking about apps. We're talking about services. We're talking about a continuing relationship that you're building, a real business, right? So you can launch an app at a lot of countries, But if you're really trying to launch a service, that's what we're looking for as investors. You're trying to, what's the category that you can take of human interest and create a business that people are going to take really care about in multiple countries. That's kind of the dream that we're all following, and I think great entrepreneurs should be building. It's not just about some trivial little app. I think we're past the app phase.
Did everybody hear that? We're past the app phase.
An app is a channel.
Yeah. Now, let me just watching the time.
So now that said, can we talk about some interesting apps?
Yes, let's talk about, now we've established apps are over. I'm going to talk about apps with these guys. Now, I'm sure you guys are seeing different interesting trends in apps, and I think in Asia, definitely a big thing is around those messenger apps like KakaoTalk, Line, and in China, Tencent's WeChat. I think these are really taking over the marketplace in an interesting way. And the most interesting data I've seen recently, I think it's actually concerning KakaoTalk. I think KakaoTalk has developed into a social network plus game platform. And recently, the open platform actually created an interesting situation. I think if you go to the iOS market in Korea right now, I think 5 out of the top 10 games are actually games on the KakaoTalk platform. So I think we are seeing some interesting change. Maybe in Japan, we're all talking about what's after Facebook, and we're thinking those platforms like Line and KakaoTalk are maybe the future champions in the mobile that would maybe take over the current leadership that Facebook has in the PC-dominated social network. So these are things that we see in some of the bigger trends you see in Asia, but do you also see other interesting trends in some of the portfolios that you've already invested in or something you're looking at today? Sorry, I took the KakaoTalk away from you.
To jump in there with not really an app, and these are partially humorous, but partially, I think, serious. Again, back to the concept of what are the simple human needs. I think you said something to the effect of what are human behaviors that aren't already met by this device that we all keep with us all the time. And already sight and sound and communication have been dramatically transferred, but arguably smell has not been changed. And yet there's now a company we just saw out of Japan called ChatPerf that allows you to take a smell, transfer it via the mobile phone, and you have a little add-in device you need on the other side, but it reformulates the smell at the other end of the cycle. And
we're talking about nice smell, perfume, right? No, like smell.
Actually, they can do rather unpleasant smells as well. And perhaps the more interesting one from long-term human dynamics is sex. So I'll let you guys look this up on your own. I'm not going to explain the device too much, but there's actually a device, 2 parts to it. One person takes each part of the device, and they communicate via Bluetooth to your mobile phone. And there's a receiving end to this, and it consummates the process.
Are you going to be at the after party, Pete?
No, yeah. I think
Love
this is
Pals. You can look it up. We're not
Peter's
investors,
personal investment. Are you sitting on the board of the company?
Love Pals. We're not investors. But maybe we should be.
That makes for a fun due diligence.
Yeah. So I think Akio, we believe, and obviously I'm a bit biased, but in the next 3 to 5 years, we're going to see services come into the U.S. from China that are innovative, they're new, they weren't invented here, they weren't created here. We heard Yang Fu talking earlier about UC Web. There really isn't a good comparable for UC Web in the US. It's wildly popular in China, tremendously innovative platform, and we've taken him and his team around to meet with some of the leaders in the internet and mobile internet space here, and they're very excited to work with this team because of what's going on in their platform. Another company I mentioned earlier, YY, 400 million users. Very popular service. There really isn't a good comparable for YY here. It's sort of Facebook meets Skype, but with a pretty strong monetization engine. So it's just interesting for us to be able to see these things that are being invented in other markets that will have an opportunity to expand here, and they probably wouldn't have had an opportunity to do so 5 years ago.
So speaking YY, why do you think they succeeded where Skype failed? Because Skype tried to actually monetize voice platform several years ago and created some platforms around it, but really never took off, whereas YY is going like crazy right now in China.
Well, I think Skype is a different business. It's a one-to-one voice over IP platform, and they monetize pretty well, generating hundreds of millions of dollars in revenue and selling for $8 billion.
Value-added services over voice. Skype actually had developer APIs in the past and tried to do that, but didn't take off. Whereas YY is actually, that's their core business.
Yeah, you know, Huawei just filed to go public, and so I can't talk a lot about it. But it is an interesting model, and it's an interesting question as to why they've been successful. I think some of it's cultural.
I have one crazy example from Japan, actually, in the app space, was kind of interesting. So it was actually developed by one of the advertising companies in Japan. And their main thesis was that the media that we are exposed to during the daytime is already saturated, right? We are all trying to get our eye share out of people's waking hours, but there's so many people going after that. So they decided they're going to go after the blue ocean, which is our sleep time. And what app does is that it actually helps you dream the dream that you want to dream. And it's kind of, I think it's totally unscientific, but they actually have had tests that maybe, I think something like 10% of the users actually dreamt what they set out on the app to dream. And of course, there are longer term visions that they want to actually start selling sponsored dreams by different companies and brands. And that's a completely blue ocean territory, but I thought it was interesting.
Talking about useful, so we're actually looking at a lot of mobile-first opportunities in e-commerce, in temporary job disruption in terms of local delivery. So things that the mobile phone has actually enabled. Uber is sort of one of the most well-known companies in that space, and I think that opens really a ton of economic opportunity.
Is that one of your portfolio?
Uber, no, I passed. That could have been one, actually, instead of Hotel Tonight. But we've done Poshmark, we've done Gigwalk, we've done Postmates, and we're very excited about the early growth which we've seen, and you know, we'll definitely look at expanding them.
So what I like to, when I get excited about a company, it's because they're solving a real problem, and I don't like to go into I like to see the technology be completely commoditized. So, you know, smartphones are great because finally I can rely on a certain amount of sensors that are already out there and ubiquitous. That's kind of the fundamental starting block for me. But then is there a problem? And so I'm on the board of a company called Waze. And what I love about it is that it's very, very global, but it solves a fundamental issue that all humans care about, and that is I'm stuck in traffic, I'm really unhappy, and I want to talk to other humans, and to collectively, all humans hate traffic, and our reaction to that is the same. So when I look at China, when I sit in a place like China, I look for problems like that. Like there's no bigger traffic problem than China, and so it's an obvious thing to solve. Another area of problem in the United States, but also, you know, globally, is monetization. I mean, all of the internet incumbents, all you had to do was read the business sections today. You know, the internet incumbents, the old mobile incumbents, they haven't figured out how to monetize mobile. We all know that's where the traffic's going. The internet itself is being changed, yet nobody's cracked it, right? Facebook hasn't cracked it. So I think that the next big thing is really the company or companies that figure out the right sort of form factor and the way to monetize, because it surely will happen.
So what do you think are the current barriers to monetization?
Partly, I think it's mindset. So Facebook's already an old company in many ways. So I think that the internet guys are looking at it from a desktop mindset, and I think that that's hurting them. I think that we're more likely to see solutions from mobile-first companies. And part of it is also just as an incumbent, look at Google's results. They were great in terms of growth of mobile traffic, but the problem is the street is looking at how profitable they are and how much money they make per ad in that environment. But somebody coming from a mobile-first position, taking share, that's what the street is looking for right now. I guarantee you, within the next 5 years, there will be 2 or 3 multi-billion-dollar companies that will solve that problem that we're not talking about today.
The other challenge is, how do companies actually get paid? How do you make money? And unfortunately, on the smartphone platform, we rapidly trained people that applications are more or less for free. So we pretty much eliminated that as a means of getting paid, and it drove us back to what you were saying, that you ultimately got to look at different categories like brand marketers. You know, is that a method through which you can get paid? But that created the massive challenge, in my opinion.
And this is where the difference between China, Japan, Korea, where people happily pay for you know, microtransactions to buy stuff, decors, and everything, really works, and it doesn't really work the same in the US. So we have to find other solutions, because what works there doesn't work here.
I think we are almost running out of time, but maybe I'd like to, in the end, open up questions to the audience, or I was told that, or to the Twitter audience, and maybe we'll take one or two questions. And if you have any questions to our star panelists here, please raise your hand. Perhaps, I don't know if there's a microphone in the audience. If not, please come to the front. Oh, there's one. So please come to the front. I'll let you use my mic to ask the question. Perhaps you can introduce yourself. What's your name?
Sure. Alex Fedosiev. I'm at Innovation Booth representing early phase startup One World Online. I have a little bit of trouble with the statement about the services versus applications, because the way I see it, the strength of application and entrepreneurship is to provide something independent from government, and the App Store is a great tool to do it. So you create your application, you sell it to deal with the customers. When you guys talking about the services, it sounds to me like a big brother thing. It's like government has to license something. You guys talking about multi-years of approval. Can you please clarify the services versus applications, please?
Oh, sure. So what I meant was that I'm very excited, as someone who's been in the mobile industry a long time, application stores are a great new channel. But don't be happy with just that step. You need to build a relationship with your user, and you need to drive them back to whatever service you've created. So what we like to see is, I don't like to see any, because I'm with the entrepreneur I invest in. I die if they die, okay? So the first thing I want to see is that you have a multi-platform strategy, that you're not going to be just iOS, for example, that you have to have an Android strategy. And God bless Windows, okay? We hope it all happens. HTML5, yeah, I have no ideological opposition to any OS, but you need diversity. But then you need to think about, and Jeff actually touched on it, the bane of, besides being too early, which we have to worry about, the cost of user acquisition is always the throttle on your business. So you just have to always be doing a cost benefit and understand that when you buy a customer, you acquire that user, you're driving them into a business that's going to make you money someday. As opposed to just doing an app. It was fun, but it's kind of over because it cost you a lot of money. It's big business now, and so you actually have to have a business behind it to make it worth your time. So it wasn't intended in any way to denigrate apps. I think it's a fantastic channel. It's better than having to go through the OEMs or going through the carriers. Hell yeah, and we need more. We need more avenues, but don't be happy just putting an app out. Build a service.
Okay, I think we are actually running out of time, so can I have one? Okay. All right, the last question, but we only need very fast, witty answers from the panelists. Nothing more than 1 minute, okay?
Sorry, I may disappoint you, but I'm Dhaval Shah. I'm in the Bay Area. I've done a startup too, and I'm in the internet video space. But I also, from a global point of view, I also wanted your thoughts, if each of you can quickly probably say, on India. How do you see India in respect to all that we just discussed?
Okay, perhaps one quick comment.
I'll give you a real short answer, Kia. We don't do anything in India. We're just 100% focused on the US and China.
Us neither.
Peter, no India?
Same.
John?
It's really a matter of timing. So what I look for is what we call smartphones today. That title is going to change. So the smartphone equivalent, the penetration rate, and the 3G or better saturation rate, right? So network deployment rate. When I see those two factors, and I think I think India is ready, but we're a few years back. Unfortunately, the regulators in that market screwed around and did not deploy licenses in time. But we saw that before in the United States, which is why we're just catching up, right? We delayed 2G. Europe got ahead of us. We're finally in the lead in 3G. India needs to be 3G or 4G. They need to make that leap. When they do, it's an exciting market.
Okay, Jeff, India, yes or no?
I said no already.
Thank you. So everybody, I think time is up. So thank you for staying for this session, and please give our star panelists a big round of applause. Thank you.